Top Tips Wednesday continues with Your Money, Your Call.
Hello and welcome to Your Money, Your Call. I'm Jeremy Hook from TMS Capital. If you've got a question about shares, our phone lines are open now, so please give us a call, 1300 30 34 35. You can also email us, yourmoney@skynews.com.au. And we've got a big program ahead tonight after one of the biggest days of selling we've seen in 2017, actually the largest fall of any of those days since November last year. So we've brought in the experts. We've got Michael Heffernan from Phillip Capital. Good evening to you, Michael.
Great to be here, Jim.
Great to have you on the show, of course. And Gary Glover from Novus Capital.
Thanks, Jeremy.
Another regular on the show. Great to have you fellows here. Guys, it was a day of selling. We've had a pretty good year to date, though, haven't we? So is this, Gary, the first of a series of pullbacks we should be expecting, or just a bit of a one-off and you'll be buying it?
Look, I think it's going to come back a little bit further here, but I think, still should be looking to buy the dips here, really, so looking at the quality end. So, I mean, to me, volume so far are sort of telling the tale. So every time we are getting a bit of a dip, we're seeing good volume breadth come in the market. And then, so when the bulls are running, there's a bit of weight momentum behind them. Mm-hmm. When we get a bit of a pullback, volume tends to sort of dry up here. Traditionally, so far, we haven't seen a big day like today. So It's been quite a while since we've seen a decent down day. So that's a little bit negative, but to me here, it's just, this should probably give us an opportunity. It's just about where this comes back to for me. That's the tricky part here.
Okay.
So, yeah.
Yeah, and Mike, March associated with the period where stocks go ex-dividend, there's often a lack of news and the market can drift a bit lower. It hasn't really done that to date, but today was certainly one in that box.
Yeah, well, I think we've had a bit of a hiatus after the reporting season. The stocks do go ex-dividend, you go down a bit, but the way I describe our market today, it's I've said before, it's the Dow Jones multiplier, as I call it, Jeremy. America down 1%, we're down almost 2%, and that's the way it's gone in Asia. Look, these don't fuss me at all. Some people describe the American market last night as almost a plunge. Well, plunge at 1%, it's just ridiculous, frankly. In fact, America haven't had a 1% fall since last September. Yeah. They've been going great guns, and so I think it was over there in America, people looking for an excuse to take a bit of profits, if you can call it that. I don't truck with that theory too much, but other people do. So we've done the natural thing that we usually do in these circumstances. They say, oh, big fall in America, we've got to be down too, and we were. Look, I think when you get good stocks that are down in, but good stocks, all the fundamentals are still as good as they were yesterday or the week before, you don't worry about it. If you're there for the medium term, you don't worry about these sort of gyrations. I don't think it's the start of anything bad. I mean, the market will jiggle around all over the place, but fundamentally, I think the fundamentals, the economic fundamentals, are there for us to perform reasonably well, I think, this year, Jeremy. So I don't get fussed by things like today.
Excellent. Okay, thanks for that. We're going to get straight into an email and our call. So we've got Ben, who's actually emailed the panel. He said, at current share prices, which has more upside potential in the medium term, Mantra or Main Pharma, MTR or MYX? And we thank Ben for his email, and we might go straight to Gary there. A couple of M stocks.
Yeah, I like Mantra here.
Do you? Okay.
Yeah, I do like it, actually. So it's come back to a pretty good level here, actually. So I've been having a bit of a nibble at that just recently here. So I do quite like it. So it's been a stock that's been in favour for a long time with analysts, but the share price has been coming back. Yeah, so to me now it's sort of getting to a pretty interesting valuation point. Okay. I still do like the story macro side of this sort of longer term here as well. So
which is really playing on a tourism theme. And
it is,
inbound tourism.
Yeah, it's quite interesting. The last probably 6 weeks, the volumes have probably doubled over the last year. So that tells me that there's, now we're seeing a bit of accumulation taking place here. So the volumes, whereas before everyone was keen on the stock, but the price action wasn't showing that. Okay. So now there's, but I haven't had a look at Main.
We might get you to do that while I'm asking Mike whether he likes Mantra at all. Have you?
Mantra.
You're a frequent holiday maker. Do you stay at the hotels?
Frequent holiday maker, but not visiting any of the Mantra facilities. No, it's not on my preferred list. And looking at that chart, I think you can see probably why. I don't like to see things going down. It's well and truly through my selling rule when the market hasn't gone down by anything near that. So look, I don't try to buy things when they're going down and saying doing a bit of bottom fishing. My philosophy on this sort of thing is I wait till they start reversing direction and start going up. So it's not on my list, let me say that at the start. But Main Farmer is another one that's not on my list either.
Right, okay.
And I think they've been beset with unfortunate trouble since they made big takeovers of Tiva and Allergan some time ago. I thought it looked pretty good, but ever since then they just went down, and you've had the pharmaceutical issues in the US. Donald Trump doing something about pharmaceuticals. Nothing's been going right for them. It's, if you like, the perfect storm for the pharmaceuticals.
Yeah, that's
right. And unfortunately, Main Farmer is in there. So it's not a stock that I'm in favour of at the moment. So no, I wouldn't be buying it at these prices. So I think I'd look elsewhere to for Ken.
We might, Ben, we might see if we've got another M stock for him a bit later, but Main Farmer was a darling of the market through 2015-16.
Yeah, it was.
And it really fell apart. It's got a quality register in terms of some of the high net worths who are on that register, who are underwater on recent raisings. And I know that the US acquisition of the generics business has sort of come out and stuck in the short term, but I think there's some longer term legs here. I just wondered technically what you're thinking, Gary, or otherwise.
It is a high beta stock, so so the question regarding performance here, so if the market turns here, look, there's a few headwinds against Main Farmer here, so once they'll subside, it's getting quite diversified now, Main, so it's getting a basket of sort of pharmaceuticals in its basket, so to speak, so it does have the potential to shine here, but to me, it looks like it might come back a bit deeper in the short term. So, but outperformance-wise, I mean, potentially Main might outperform Mantra because Mantra's probably a safer low beta stock.
Yes.
Whereas, obviously Main's gonna, if it gets it right here, it'll probably swing big. So there's more risk with your Main, but maybe more reward as well if you get the timing right.
That's a good breakdown and a good answer to Ben's question. We've got a caller on the line. We've got James who's calling in. Good evening, James.
G'day, mate. How you going? Thanks for taking my call.
Pleasure. Question for
mate,
the panel.
I'm living down here in beautiful Bella Beach, and most of the retired people down here, their biggest portfolio, like myself, is in Telstra. Okay. We're a bit concerned about that. Yeah. And personally, the other one I'm sort of losing a few dollars on is HealthScope. Can you help me with those? Yeah,
excellent. Thanks for your call, James, and what a lovely part of the world he lives in. But it can not look so good when your shares aren't performing well. And Telstra's had a rough time. Yesterday's TPG profit result was part of a catalyst or a bit more of a sell-off there. But ex-div 460 odd. It's a massive yield. It's a good quality income stock. But is it going to grow? Because its share price really isn't going to respond if it doesn't have decent earnings growth. I think it's low single-digit sort of stuff. Hef, what do you think?
Well, Telstra is a stock that many investors have, and many of my clients, and I'll declare an interest, so myself. It depends on what your objectives were in buying Telstra in the first place. If you were a superannuant with your own self-managed super fund, you want to get the income predominantly, Telstra's good. Telstra's not going to fall through the floor, in my view. At $4.60, it's an excellent yield of in excess of 6%, and that's without taking account of franking, because if you added that in, you're up over 8.5%, close to 9% income return. Now, my view on Telstra was that its last report wasn't too bad compared to its previous one, where it said it's going to have low to mid single digits earnings growth, I think it said, which was the same as what it was the 6 months before. And yet its share price went from $5.20 or something down to below $5, $4.70, because that's the market, got into its head that it was a bad result, could have been better, where's its growth coming from? Well, Telstra is a monster of the telecommunications sector. If it can't do something with all the assets that it's got at its disposal, then I'll go he. And I think it will. And I think it'll be able to combat...
Is that, just stopping you there, is that the big risk, though, that it's trying to defend market share now rather than the more nimble, smaller players that are going to come in and eat away at its business? Is that the risk there?
Well, of course it's a risk, but I think it's good enough to meet the competition. I thought TPG's report actually wasn't too bad either. Yeah, I mean, that was all right. There's one to look at. But, you know, it'll put them on their mettle, which is good.
Yeah.
And, you know, force them to do things and meet the competition. And, you know, it sharpens them up. So I think it'll be good rather than bad for them. I think they're big enough to do it.
Valuation, do you have one for Telstra?
Oh, you mean a price target?
Yeah, price target.
I don't believe in it myself.
Okay.
I think it's an okay stock. I think it'd be pretty easy for it to get to $5. You know, it'd still have a yield of well over 5%, fully franked.
And I reckon it's worth about $5.20, and I'd be trying to lose some if it got there. That's my view.
Yeah.
Gaz, how do you see it?
Oh, look, there's no doubt Telstra growth is starting to subside here, but still a quality business, still in a growth sector for Mind here. So although there's more competition entrants in that space here, and obviously TPM has talked about getting the 4th licence, that gave them a bit of a boost the other day.
Yeah.
So look, some other parties trying to muscle in on what has been, Telstra's had a pretty, you know, sort of home run almost, sort of exclusive there. So look, I do like it actually here, but compelling, not necessarily, but yeah, very good value here. I think valuation looks pretty cheap. I do like the sector here. I just think, you know, there was a stat out the other day about the data use has gone up.
Yeah.
And it hasn't gone up like 10, 20%. It's gone up like 50, 100% in the last year.
Absolutely.
So data is just going through the roof. And, you know, having had to go and buy 3 plants for my kids recently, that's happening, you know, Australia-wide here.
Yes.
So the more plans, more data. It's, you know, that's not going to go away here yet. We're still in a strong growth phase here. So I like the sector. I think most of the stocks in that sector looked a bit undervalued here, and they've all been carted here on the back of NBN and competition and all the rest of it. So the whole sector's quite cheap here. So I like good, strong growth sectors when they're out of favour, and I think you know, I quite like a few stocks there.
Okay, good one. Now, we were also asked by James about HealthScope, which is, you know, a sector I think we broadly say we all like, but is this the stock in the healthcare sector, the second-tier private hospital operator? Hef, it's gone down to the 2.15 mark, I think, at the moment. So.
Yes. Look, HealthScope is, I'd call it okay. Ramsay, much better, but I'll put a caveat on Ramsay. Ramsay's fallen reasonably significantly from $84 down to where it is now. It dropped down to 62 the other day. That was through my 15% rule as well, I might say, even when the market's flat. Ramsay is a great stock. When it goes through the rule, you have a look at it. Yep. Now, a lot of people bought Ramsay at well below these levels anyway, so a lot of the clients are looking at a profit on this thing, and a lot of viewers out there, no doubt, have been looking at profits in Ramsay, I would say, as well. In this situation, you could look at it and say, well, I've made a nice profit. It's gone down, you know, you don't know why, but it has. What do? You either hold it if you want to, or if you're making a profit, you can trim some of it. You don't have to sell everything, trim some, and you can put it into something else that you think has got a better growth trajectory than what Ramsay does at the moment. It's had a stellar run. One thing you can say for sure is its rate of increase that it had last year will not be repeated this year. That's what I would say. So
have you bought HealthScope at all in the...
HealthScope?
Yes.
No, I haven't.
Okay.
I haven't. I haven't bought it. It's not on my preferred list, but it's on the interchange bench. I use that expression quite often.
Stocks on the interchange bench. You always need a few. You just got to know when to bring them back on the field.
They might come on the ground during the game.
And I'm going to bring Gary on the field on HealthScope after we're going to go to a break. So after the break, after you call 1300 30 34 35, back with more questions for Mike and Gary.
Well, you know you make me wanna kick my heels up and throw my hands up and throw my hair back and come on now. Don't forget to say you will. You know you make me wanna say that you love me, say that you need me, say that you want me.
The $10 Australian-grown cotton tea. Naturally soft for tough love.
Jump up and shout now.
The market's tough, but it's not impossible. So we're helping people find different ways in.
Some people buying their dream home before they're even selling the existing property. Some people are using their equity in their home to renovate instead of moving.
Find your path with our dedicated home lending specialists. With CommBank, you can.
If your goal is to retire right, AMP can help with expert advice to make the most of the super changes before July 1. Visit amp.com.au/superchanges.
The multi-awarded Hyundai i30 isn't run out, and they're running out fast. Now with a free $2,000 gift card on selected i30 models. Run in today before we run out. Enough said.
With the right planning, it's amazing what you can achieve in retirement. Be ready for next with Australia's largest provider of retirement solutions, Colonial First State.
Kia's 7-day sale is on now. On top of great drive-away deals, receive a free $777 gift card across the range. Plus Australia's only 7-year warranty. Hurry, Kia's 7-day sale ends March 26.
At Officeworks, we don't just say lowest prices, we try to live them. These assorted boards are perfect for reminders at home or in the office, only $9.97. This 10-pack of archive boxes means you can do your filing for a great price, just $19.98. And send parcels for less from Officeworks to anywhere in Australia using Mailman prepaid satchels from $7.50. At Officeworks, we live lowest prices. If you've got the big ideas, Officeworks has the lowest prices.
QuickBooks introduces Jeanette and her new mobile wedding business. At first, getting paid was tough until she got QuickBooks. Now she sends invoices, sees when they've been viewed, and ta-da, paid 2 times faster. See how at quickbooks.com.au.
Welcome back to Your Money, Your Call. We're still taking your calls on 1300 30 34 35 or your emails, yourmoney@skynews.com.au. Just before the break, we were talking about HealthScope, which was the subject of a question we had from James. I didn't get to Gary. We knew that Mike had it on the interchange bench. Will you run this player on the field, HealthScope?
Almost here, actually. So, look, the stock's come back quite a bit, so valuation's starting to look a bit more compelling here. Still a bit pricey there, obviously 23 times earnings, so is a little bit up there still, but this stock does have quite a strong growth plan forward here. There's a lot of new hospitals opening up in the coming years, so for me, I'm looking at this quite closely here. There's a really interesting technical pattern on HealthScope. So the stock basically had some fairly decent swings over the last few years, 220 up to 310, came back again. It actually went up and made what they call a false break, so went to a new high and then failed.
Okay.
And then oftentimes when I see that type of pattern here, in my experience, when we see a false break of the high, it'll normally come back and retest the low again. So that was $2.12 there back in early 2016. So for me, the technical picture it's always been telling me it has to come back to 212.
Yes.
So ideally it goes just underneath that there. So I'm kind of looking for a little bit of a washout here, just maybe under that maybe somewhere in that sort of 210 range. But I think there could be an opportunity here coming up for HealthScope here. So if you like the stock here, I think it's going to get a little bit lower here, but I think it could find a low here soon.
You're ready to press the coach's button and get it on the field. Our next caller's on the line. We've got Colin, who's calling in. Good evening to you, Colin.
Hi, panel. How you guys going?
Yeah, really well, thanks.
Thanks for taking my call. I just wanted to say I love the show.
Yeah, great. That's good.
Also, the question today is on Medical Developments International.
Okay.
Stock code MVP.
Very topical.
They offer the Penthrox product through inhalation. Pretty unique delivery methodology. Seems to be pretty well differentiated. Profit growth 90%, looking pretty good. Operating cash flow on the rise, expanding into global markets. It seems to be quite a lot of upside potential with a lot of growth ahead. Very high PE, so it's obviously a very high risk scenario, but obviously the smallest cap I have. So be interested to hear your thoughts.
Great, Colin. Thanks for your question, and we'll have a look at MVP topical. Is MVP the most valuable player, Gary?
Not sure here actually this one. So look, stock's had a sensational run here for the last couple of years. Since it's peaked to around April last year. It's had a bit of a pullback here, so a bit of a correction in sort of time here. Look, it's had a good run off the low and then it's pulled back again and it hasn't come back to a new low there. So look, it looks interesting to me. Don't know enough about the stock here actually to sort of make a big call here, but look, it doesn't look too bad. For me, it looks like there might be a bit more time used up here on its side here, and that's probably, oftentimes when you get the growth companies, they do make some runs, valuations can get a bit stretched, and then they need to keep making more runs for them to, to keep running with that, higher valuation. So just might need to kick a few more goals here, I guess, in order to get the share price going, because it's probably a bit, fully valued here.
So the main product, and they've got a few, is a Penthrax green whistle, effectively, to deliver, an analgesic effect straight away. So it's a great concept, and anything with a concept is popular can get overvalued in the market. It has obviously, though, achieved good metrics, which is even more exciting. But again, it's possibly at times run very hard on the expectations. It's not a business that is without competition, and it could run into some of those stages, but it is a seriously good business. Is it one that's come across your desk at all?
Well, it's not on my preferred list, Jeremy, but just looking at some of the information in front of me here now, what it does have, and this is one thing I do like, is momentum, and it has momentum. And when I look at these things, I look at how they've gone over the last year, the last quarter, the last month, the last week, it's all green. All green. Now, that would have shown up on the chart there when you look at how it's gone in the last. It wasn't so flash before that, went down, but what I do like to see from stocks is consolidation in a general upward direction. It's got that. I'd need to look at it a bit more closely, see what the fundamentals of the thing are. You've described it very well as to what it does. All sounds good, but I'd like to look at in detail about its debt, its return on equity, all these other things, PE ratios and all that before I'd make a decision. But at the moment, it's another one joining the other crowd on the interchange bench. But from what you said, it might be ready to be towelled down and ready to run on.
It's hard to be MVP if you're not on the field, though. It's very difficult. We've got our next caller on the line. We thank Colin for his call. Wendy's calling in. Good evening, Wendy.
Good evening, Jeremy and Michael and Gary. Love the new setup, looking very good. I have a couple of stocks. One hasn't gone in an upwards direction, it's gone sideways. I bought Aurora back in November and it hasn't really done much since. And the other question's about Steadfast. We all need insurance, and hopefully it'll be one of those stocks that we'll always need, and we'll have that upward direction. Can I just have your thoughts?
Yeah, of course, Wendy, no problem. We'll look at Aurora and we'll look at Steadfast too. Quite different businesses. Two that I've noticed have, despite various price movements, got appeal amongst institutional investors. Are certainly on the watch list of some of the investors that I regard well. Aurora, Mike, how do you see that one?
This is ORA.
ORA.
ORA and Steadfast. Wendy, you've got the double. Both those ones are on my preferred list, let me tell you. I do like Aurora. It's got a twin, as I'd call it, in that area, packaging area, and that's the Pact Group.
Yes.
It's got all the fundamentals I like, and it's also got the momentum that I like as well. So I think it's very good. And Steadfast, the business about clipping tickets, I mean, that's what these insurance brokers do. Not a bad business to be in. It's like a tram conductor, go clip your ticket, doesn't have to do anything except clip your ticket. Yeah. And that's not a bad, I'm making it very simple. But that sort of business, I think, is quite good. And, nothing is a passport to, just going through the roof. It's not. But I think Steadfast, I think, is not a bad one to look at in that mid-cap area. I think that's all right. Aurora is in what I call the light blue chip area, and also got the fundamentals I like and got pretty good growth. So I give ticks to both those ones, Wendy.
It's good, yeah. Aurora, very high return on equity and a quality business. It's done actually reasonably well overall, but more recently a bit softer. Steadfast, interesting. I mean, its most direct comparable stock would be Austbrokers, where it's a series of insurance broking businesses. And I remember studying doing a bit of work on the sector a few years ago and working out just how much greater the returns from broking and insurance were than underwriting overall. But the underwriting business has some appeal at times. Gary, how do you see either of these two stocks, Aurora and Steadfast?
Yeah, look, I mean, look, as Michael Subotain there, that the stocks have had a pretty good run here, so they've been trending up for quite some time there. There's just, to me, both of them actually showing a little bit of sign of running out of puff here, but I don't see like a high commitment seller. All I see is they're just showing a little bit of weakness here, so more than likely to me that they might drift back here. Okay. Probably Steadfast a bit more, actually looks a little bit more stretched here, so that one then might come back and maybe give those an opportunity looking at it, to buy it a bit cheaper here. Okay. But Aurora as well just looks like it's sort of run pretty hard here, just showing a little bit of sign of weakness here the last couple of weeks, so might drift back here, maybe back to this 270, 260 level. Yeah, no, well-performed stock, and again, it only floated probably, I'd say, 3 or 4 years ago. So a good performance for those who've been invested in there and many of the companies. Also, you've got to be aware of sometimes how stock comes out of escrow. Once they've made acquisitions, they give stock for that, and patches of stock come out at various times. It can be something to be aware of with something like Steadfast. Well, that's time for a break for us, but for you, it's time to pick up the phone and give us a call. 1300 30 34 35, or send us an email, yourmoney@skynews.com.au. We'll be back with more of your questions very soon.
Kia's 7-day sale is on now. On top of great drive-away deals, receive a free $777 gift card across the range, plus Australia's only 7-year warranty. Hurry! Kia's 7-day sale ends March 26.
For decoding a complex world, for understanding the nation you live in, for provoking the national debate, for knowing where you stand. The Australian, for the informed Australian.
The market's tough, but it's not impossible. So we're helping people find different ways in.
Some people buying their dream home before they're even selling the existing property.
Some people are using the equity in their home to renovate instead of moving.
Find your path with our dedicated home lending specialists. With CommBank, you can.
You know you make me wanna kick my heels up and throw my hands up and throw my hair back and come on now. Don't forget to say you will. You know you make me wanna say that you love me, say that you need me, say that you want me.
The $10 Australian grown cotton tee. Naturally soft for tough love.
If your goal is to retire right, AMP can help with expert advice to make the most of the super changes before July 1. Visit amp.com.au/superchanges.
My nighttime skin ritual, Olay Regenerist Overnight Miracle. From first drop, it helps renew your skin, and used with Olay's most advanced cream, it boosts skin renewal in just 5 nights. For firmer skin with visibly reduced wrinkles, search Olay Overnight Miracle.
At Officeworks, we don't just say lowest prices, we try to live them. We check competitors' prices because we're always trying to stay the lowest. We buy our stock in bulk. The more we buy, the less you pay. And we know we might not always get it right. That's why, if you find a lower price on an identical stocked item, we'll beat it by 5%. At Officeworks, we live lowest prices. If you've got the big ideas, Officeworks has the lowest prices.
Welcome back to the program. If you have a question you'd like answered about shares or anything related to the share market, give us a call on 1300 30 34 35 or email yourmoney@skynews.com.au. Joining me on the panel tonight, we've got two wonderful panellists. We've got Michael Heffernan from Phillip Capital and Gary Glover from Novus Capital. And we've got Anne on the phone who's called in. So good evening to you, Anne.
Yes,
Hi.
good evening.
Hi, Anne. How are you?
I'm well, thank you. I'd just like the panel's recommendations, if any, on Gateway Lifestyle, thank you, and whether you see that as a good investment for a superannuation holding for the dividend as well as some growth.
Okay, yeah, terrific, Anne. We'll answer that one for you. Gateway wasn't listed a long time ago, maybe 2 years ago from my memory, and pays a good yield. It performed well initially, but did get sold down. Gary, did it flash up on your screens at that time to buy it?
No, but it has been flashing up the last couple of weeks here.
Okay.
Similar to Healthscope here, actually. So Gateway, again, had that great run. And this is an observation I've noticed with actually newly listed stocks is sometimes when they come on the board, say they come on at $2, they have a great run up to, might go to 260, 280, whatever it is. Yeah. Then all the heat starts to come out of them. It's like anything else, they get overbought, they get oversold. Oftentimes they'll come back and retest the listing price before they might go on later on. So I've noticed here that Gateway has done exactly that. Started at $2 here, it's gone to $3. Spent a bit of time congesting, just come back in the last couple of weeks, just gone slightly below the listing price, and then bang, we've seen a bit of volume come in here. So to me, it looks pretty interesting here, actually. So
I'm interested in your thoughts there, just to expand on with some other stocks. And it's a good answer to Anne's question as well. But if I said some names, you might add some to me. But Isentia, Baby Bunting, Oz Forex, it's some that floated, went very well to begin with, and came right back down. And Mike, bringing you in here too. I mean, is it that there's an appeal in an IPO that gets people in the aftermarket chasing it up, getting positions, and not having particular regard to valuation?
I think that...
Bingo.
Sorry. Yeah, no, you go.
It's a winner.
No, I think there's merit in what you're saying there, Jeremy. IPOs are for certain people. I'm not a great fan of IPOs. I'd much rather buy things that have got a track record and see what they're doing rather than taking a bit of a punt before they go. Isentia, I thought was quite good some time ago. Fell off the perch though, and it's not one I'd be chasing at the moment. Gateway, I'm not familiar with that one. It's an investment company, is it? Is that what it is?
No, it's a trust.
Property
trust with aged care.
Well, if it's in the aged care thing, I'm not all that fond of it. It sounds good, big growth area, aged care, but the government have got involvements in that sort of thing, and that really puts me right off. Anything where the government subsidises it or gives us some benefits or something like that, if that's what it is involved with, then I will. It's not my favoured sector. And looking at the chart, it didn't seem to me to be all that flash either. So, if you're looking for dividends, you're looking for safety, I think there's a lot of other options you can go to, frankly.
Yeah, okay. But, and Gary, just last thoughts on Gateway and with respect to how to play post-IPO stocks. Was it not the right thing, obviously, to be chasing it up? A stock of some interest based on the sector it's in, etc. Yeah.
Well, look, there's just it doesn't happen to every stock. I mean, obviously, things like Domino's never really. They had a few corrections along the way, but they kept going. So there's obviously a few exceptions there. But I've just noticed that there's been quite a few that have gone a bit hot early. Yeah. And then come back and retested the lows and then gone. I think even Medicare Private. MPL did the same thing, went up, came back, retested, then went again. Gives you a chance, So, look, they do. I think everyone's always scrambling to get in the IPO. When it gets buoyant, everyone gets excited by it, and then it runs up, and then they suddenly start looking at the valuation. Think, shit, this is expensive, and then everyone sort of maybe flocks out, and then by the you get to the end of that, everyone's probably over negative, and then overshooting on the downside, and then that's when your opportunity comes. So yeah.
Excellent. Thanks, Sam, for your question. The next caller is Roger. Good evening, Roger.
Good evening. Thank you for taking my call.
Welcome.
Yes, I'm interested in two stocks, please. One is called New Farm.
Yes.
NUF. and what is the panel's view on that? The other one is a technical view of either AGL or Lend-Lease, which is better technically, please.
Okay. You've picked some good stocks, Roger, because they're all going well. I think we had a year high on New Farm today, so the crop protection group doing very well. AGL's been a good performer, and Lend-Lease, well, AGL's been good over a couple of years now, and Lend-Lease has been quite good over the last few months. So there we go. Well, let's maybe talk about New Farm, because it's an interesting business. It's had a couple of sort of false bids over the last 5 years or so. Some pretty ordinary performance, change of leadership, Doug Rathbone moving on. How does it look now? I mean, it's got good momentum, Mike.
Oh, New Farm, yeah. I mean, I looked at its report, which came out today or yesterday. Yeah. Looked very good, very impressive, coming back from the dead of a few years ago. No, I think New Farm looks very good, and also its future guidance I think was quite okay as well. So look, New Farm is number 41 with a red bullet, and it's coming right in.
Can you explain what is number 41?
Oh, you know, the top 40.
Yeah,
You know,
okay.
it's an expression.
Okay.
Well, I like it, yeah. No, I mean it's coming back into calculation, right? Into my calculation, and it's just about knocking on the door of my list at the moment. So I think it's been a very good. The only people who would have understood 41 with a bullet would have been people who are used to listen to pop music many years ago.
Countdown or
That's Countdown. Would be a predated Countdown. You know, but yes, I know. I'm a good reader of history about all these things.
You've heard. And Gary's very musical as well.
Yeah.
Gary, talking crop protection.
Yeah.
It's actually a 7-year high, is it, on New Farm?
Yeah, look, I think actually the sector as well. So ag sector's been pretty buoyant here. There's actually quite a few new IPO deals floating around town as well in that sector as well. So that's always a good sign that the sector's hot if there's some new deals sort of starting to flow through. So always got to be a little bit careful, once everything's been running hot here. But we tend to think here that ag's still got some legs here for mine. So New Farm still looks okay to me. On the other stocks there,
that's AGL and Lend-Lease was the other side of Roger's question.
It's funny, I had put out a bit of a high conviction list a couple of months ago, sort of for the year, and my number one stock for the year was to be long Lend-Lease, just from a valuation perspective. I thought it looked compelling, cheap. Kind of remind me of CIMIC there, maybe going back 18 months ago when it looked as cheap from a valuation point of view, and really when you're getting a stock on at that stage it's very low, probably a dollar ago was a very low multiple, 10, 11 times. The earnings, the dividend yield was like 5.5%, 6%. So you're getting almost. You
weren't buying a lot of risk, were
no,
you?
and you're actually getting a growth sector too. So if you're buying into the Trump, and the one thing which is going on around the world is infrastructure spend.
Yes.
So Lend-Lease are going to partake in some of that upside. So to me, that looked the compelling pick for 2017. So I still think Lend-Lease.
And well done, because you got that right. I must say, I've liked it through. I won't say thick and thin, but this year's been good for Lend-Lease.
Yeah.
Like you said, it seemed remarkably soft at the end of last year, and I'd held it really through most of.
I still think there's a bigger move here. Actually,
Yes,
I've been trying. I'm normally pretty active writing covered calls if I see a big move.
But you're holding
so
off.
Lend-Lease is the one that I'm trying to stay the course because I think to me it's the one that can have a big move this year. So I do quite like it. I think AGL's had a great move. I'd be lightning off there. I think that's looking quite.
It's quite interesting.
Standard on a valuation perspective.
And I might go to Heft there. I mean, AGL's benefited from having generation at a time when electricity prices have spiked. We know Alinta's now been bid for. That was going to be something we might have been talking about here as an IPO, but it's now going to be taken away as a trade sale. Would you be long AGL at the moment? Is that the place to be?
Well, it's one that it's caught my attention for quite a while now. You just keep watching it going up. It's at record highs, I think, at the moment. The thing about it, it's in the energy thing. It's in traditional energy. It's also got the renewable stuff. It's got the distribution as well. It looks pretty good to me. I know it's at a high point, and you say, gee, can I do it? But I think there might be more in it though. At the moment, because of the area that it's in. It's almost by itself as being a good one there. Origin not in the same class.
Don't own the generation capacity that and they're obviously in the export sector too. So
Yeah.
servicing into this local market's more profitable.
Just got to be careful when it starts getting sort of priced for perfection. That's the risk that I see there. So
well,
so you can see more upside because of where it's priced. But it's a great story for long-term holders. You know,
it is. It's okay dividend as well.
Yeah, it's a good dividend and a great stock that one, if you just sit back and did nothing with, you'd be very happy. And of course, it's one of the oldest listed stocks on the market. So the nostalgic part of me loves it when it's the old listed stocks that do very well. So we've got another caller on the line. We have got Neville on there. G'day, Neville. How are you? Oh, Neville's actually written into us, so he won't reply to that, but he will say the question for our panel tonight. Could you give the story on RCG, Retail Cube Group, please? That's his question. Thanks very much, Neville, for your question about RCG, which has been, mostly a good performer, but not always. Is it one of the HEF favourite, the top 40?
Top 40? No, it's not actually on the top 40. RCG is one that I've come across it before, but then sort of put it away. It didn't get in the interchange bench. I think it was in the grandstand. But RCG, is that the Foot Locker thing?
Yes.
Yeah.
Athlete's Foot.
Athlete's Foot. Yeah. Look, it's not on the list, and I don't know why. I can't tell you now. But if I had a look at the chart, I'd probably have something to say. But look, if it's a retail area, and I'm not all that keen. Although, having said that, Premier Investments, even Noni B and Nick Scarley have done okay. I mean, a lot of people say the retailers are not doing very well. They're three that have probably done quite well. RCG, I'm not sure about that. I'd need to have a look at what's been going. But
but you own a couple in that space. Premier, very, very well reported yesterday. There's the graph for RCG.
There's RCG there. Yeah, no, it doesn't look good. I wouldn't be involved in that one. I think, my philosophy on that, it obviously didn't meet my criteria. Now you've got to wait until it starts moving up again before I'd even consider it.
Yeah, it's one that I've never touched, I've got to say. And there were some good periods in there, Gary, as well. So, depending on when you held it, you could have done quite well. But I couldn't see the particular competitive advantage. And I think if you're a retailer, what I look for is a simple concept that can be rolled out. To me, that's one of the most basic business concepts that exists.
Premier.
Premier, yeah, exactly. You get a really hot idea in retail and you can roll it out elsewhere. You make a lot of money. I just didn't ever see the growth, and I saw some of the competitive threats to the businesses within RCG. Gary, technically, is there any hope there?
Yeah, look, prices have come back a lot. So what are we, $1.95 back to $1 here? So that's we're almost halved here. So it's look, it is interesting here. What the PF 14 or under 14.5 here, the yield's almost 6% here. So looking interesting. I've always been a fan of Foot Locker actually, because I'm being a past basketball player. It's probably got one of the best US shoe-based collections that you can get. So if you're into your sort of sports shoes, they do it very well. But the one thing which is happening globally is that the manufacturers now are starting to offer personalised shoe services. So you can go and order your Nikes, Adidas online. Get them personalised.
With your name on it and all that sort of thing.
So it is making it a little bit tough for that segment. So, look, there's some hope here just because the valuation is starting to look a little cheapy, but I do worry about the segment.
The only thing I'd say is on valuation, I think it's traditionally traded with a pretty lofty yield anyhow. So it's not necessarily on special given regular valuation metrics.
But it must have been trading on a yield of about
pretty
half of that.
So at some point, Well, no, I think that but 5, 6 sort of thing has been the number, I think.
Well,
So look, again, it's an interesting stock, but I don't think we feel that even though there's a valuation story there, it's quite the time to buy it. We're going to go to a short break for our viewers, and we're going to be back after that break with more questions. But we are still here and are taking calls, 1300 30 34 35. See you very soon.
The market's tough, but it's not impossible. So we're helping people find different ways in.
Some people buying their dream home before they're even selling the existing property.
Some people are using the equity in their home to renovate instead of moving.
Find your path with our dedicated home lending specialists. With CommBank, you can.
Kia's 7-day sale is on now. On top of great drive-away deals, receive a free $777 gift card across the range. Plus Australia's only 7-year warranty. Hurry, Kia's 7-day sale ends March 26.
If your goal is to retire right, AMP can help with expert advice to make the most of the super changes before July 1. Visit amp.com.au/superchanges.
You can save up to 24% with Allianz on a new comprehensive policy online when you name your drivers. Don't just be insured, be inspired. Allianz.
How hard is it to find a home loan online? Sifting through so many different rates, what loans do you even qualify for? It seems impossible until now. Lendy does the hard work for you, instantly comparing thousands of home loan products from over 30 Australian banks and lenders to find the right home loan for you. No lining up at the bank or applying for the wrong loan. Now you can complete your home loan online. Just visit lendy.com.au. Whether you're buying your first home, refinancing for a great rate, or investing in property, Lendy allows you to compare all types of home loans from a huge panel of major lenders to choose the one that's most suitable for you. Next, apply for your loan online at Lendy. And if you need help, chat to a Lendy concierge who'll make your home loan settlement easy. Don't waste time doing it the old way. Compare, choose and complete online the easy way with lendy.com.au. Lendy, your home for home loans.
Kia's 7-day sale is on now. On top of great drive-away deals, receive a free $777 gift card across the range. Plus Australia's only 7-year warranty. Hurry, Kia's 7-day sale ends March 26.
QuickBooks introduces Jeanette and her new business, I Do To Go. Jeanette was excellent at marrying people, but had trouble getting paid. Not a good time, Jeanette. Even worse. Now I'm uncomfortable. But here's the good news. Jeanette got QuickBooks. Send that invoice, Jeanette. Looks like they viewed it. And ta-da, get paid 2 times faster. Way to grow, Jeanette. Get paid 2 times faster. Visit quickbooks.com.au.
Welcome back to Your Money, Your Call. If you've got a question you'd like answered, call us on 1300 30 34 35 or email yourmoney@skynews.com.au, which is exactly what we've got Michael who's called in. Michael, good evening.
Good evening, panel. Thanks for taking the call. I'm calling a couple of small to mid-cap stocks here, CL1 and HUB.
Okay.
Just wondering if I could get your opinion about those stocks. I'm wanting to add some smaller stocks in my portfolio, please.
Yeah, great. Okay, thanks for your call, Michael. Two well-performed stocks, definitely. Class Super, CL1 and Hub24. HUB is the code there. So they're in the fintech space, I guess, is probably how it would be regarded now, and a very high growth sector if you can get it right. And these two have. Class, Gary, looking good.
Yeah, no, look, it's had a great run off the bat here, so it hasn't been listed for that long, but yeah, it's actually one of those stocks that a lot of good judges that I know in stocks think this stock is quite compelling. So the metrics are compelling. So the hard thing is getting your head around what they do. That's because it's it's a portal for supplementary super funds, accounting based. So there's a few of them out there that do different things. So unless you're actually specifically in that, it's it's hard to fully understand it.
Yeah, it's disrupting that accounting space and provision of software and accounting products for that, particularly the self-managed super space.
Yeah, I'm a big believer, and I like to touch and feel a stock company, know exactly what they do. So this one, I'm sort of floating thereabouts, not exactly, but
what it does do, it does it at a good price, which has been important. And again, once you get through the networks of accountants, etc., you can really sell out. And the thing that makes you wary is probably some of the appeal right now, which is once you've got the platform established, the software works, the leverage and the upside and the returns, margins.
We saw with Xero. That's right. Xero got it right initially, and really kicked some goals here. So I know a lot of guys think this is quite similar. So quite well managed as well. How well the company's been managed to date, nice and tight, solid financials. So So look, it's had a good run. It's a pullback here. It's had a bit of a bounce. The volume's in there, so technically it looks pretty good as well. So.
And Hub24 on the other side is a managed accounts platform. That's done really well. It's grown its assets under management, which is how it gets its revenue. So it's been another one in that space. These stocks just generally, is there something else apart from these ones?
Well, none of them have got onto my list yet. We've seen things like Xero, for example, up at $40, you drop right down, never made $1. I don't know about whether Class 1. Class 1 looks all right. Certainly its trajectory and momentum don't look too bad. So it's worth a look at. But you mentioned, you probably know more about it than what I do, but I know that space is in, and GBST, for example, in a similar, not exactly the same, but that sort of area hasn't been performing either. So I haven't been in any of those. Is Class 1, I take it hasn't been listed that long, is that right?
No, that's right, yeah.
What's its profitability like? I mean, is it actually making any money like a Xero was?
Revenues are rising enormously, but it's...
Beg your pardon?
Revenues are rising rapidly.
Might be. What about profit?
I understand it's short of profit, but it's, again, backed by the Count Group, which is the Barry Lambert group, and through all the accountants in the network and the wealth accountants. So it's got quite a big supporter base. And again, the revenue numbers are telling the story.
Well, revenue's one thing, profit's another, and that's what worries me. I mean, Xero had revenue too, but no profit.
Correct.
And I think that was a big problem. So I guess with me, the jury's out. Yes, I'd need to get a bit more information, see a few more reports, and then I'll make a judgment on it. But I hear what you're saying, so it looks like it's got some merit there. So okay, we'll watch it.
Good one. Now we've got time for a last email. We've got Dean who's emailed in to the panel, and we'll take these answers questioning. Just about Nearmap, which has had a stellar run with its US expansion. It's fallen very sharply in the last couple of days. Not a lot of news. Any thoughts on that? Nearmap provides high-quality imaging in Australia and the US. Anything of interest there, Gary, technically?
Yeah, look, I've been asked about this one a few times actually, and just because there's another stock that I quite know well is Spookfish, which is a few guys have rolled out of Nearmap years ago, and Spookfish is a bit further. It's always worried me a little bit with Nearmap. I like the business, like the sector here, but the technology can be so, it is changing quite quickly, can evolve quite quickly here. So I was aware that Spookfish, its technology was a bit more advanced, but even though they're maybe a couple of years behind commercially. So it worried me that other competitors can probably potentially in the future offer a better product. So yeah, I don't know. It always seems risky to me just because of that risk, So
it's an interesting business, but it again has some risk. Ever had a look at that?
Well, it has come across my desk, so to speak, but it's not one that I'd be going for. I think it's certainly blown through my selling rule. I think in recent time, well and truly. So it'd be off my list even if it was on it, and it hasn't actually been on it. But I hear what you're saying, Gary, about the thing, and I think it's in an area where there can be competition and this sort of stuff, which is a bit of a worry. Anything involved with IT and anything like that, which is essentially what it's involved with. It's a bit of a worry for me, so I need to see a good track record to be into that.
It's had some okay results on
it. Had some very good results at the half year, and again, what I would say is that there was some rumouring of change in management, which is something not well received, particularly given the CEO's only been there for I think a year or maybe 18 months maximum. So those things can concern the market. There may not be anything substantial to that, but that's one to keep an eye on. Well, that's all we've got time for on today's program. It's been a fun-filled program with hopefully lots of information. So we thank our guests very much. Firstly, Michael Heffernan from Phillip Capital.
Thank you.
Great to see
Great
you.
to be here.
Thank you. And thanks to Gary Glover from Novus Capital. Thanks Gary. So thank you all, viewers, for your calls and emails which make our show. And from me, Jeremy Hook at TMS Capital, have a good evening.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.